Good evening, sir.
Good evening. Hi, how are you?
Fantastic.
Your audio setup is causing an echo. Click here for help. Why? Why is my audio setting causing echo? Is picking up sound from your speakers. Lower your speaker volume. Okay, let me lower the speaker volume. See. Where is my presentation? Let me check. Right.
Shall we start, sir?
One sec. Yeah, please
O-
start. Start. Yeah,
Okay.
please start.
Okay. Hello, everyone. I'm Raghav from the team of GISA Council. I welcome you all to the webinar on Bank IT Audit, RBI, CRTIN, NPCI, Align. GISA Council is a not-for-profit organization aiming to empower individuals and organizations through the promotion of skilled training and certification. GISA Council promotes various training and certification programs like Associate Information Systems Auditor, CISA, CSM, CIRISC, Prep Training, ISO 27001-2022 Lead Auditor, CISSP Prep Training, GDPR Specialist, and many more. Within 1.5 years of establishment, GISA Council has educated and trained 2,500 plus professionals from 59 countries, more than 160 global enterprises, out of which 30 plus are of Fortune 500 companies. Thank you for your trust on the GISA Council. Now, please note that in the last 10 minutes of this today's webinar, we will provide a link to claim your CP certificate of 1 hour. Please make sure to fill out the form to receive your certificate. Best wishes to all the participants. Ayer sir, over to you. Thank you.
Thank you. Thank you. Hi, everyone. Okay, I am kind of struggling to get two things going together. Just give me a sec. Okay. All right. There we go. Share this tab. Okay. Hopefully this will be in full screen mode. Okay. Quickly, guys. There's a fair amount of ground to cover. So I am going to be a little faster than I'm used to. Right. We have been, this is part of the series of, we've been doing a series with here at GISA Council. We're trying to bring a focused aspects of auditing IT systems of some industries and some parts of IT. Specifically, we did one on cloud last couple of months ago. We did another one on how to audit software development projects. We did that. And I'm also hoping to do one on, BCP, DRP, how to audit a BCP, DRP framework. That will come up. Part of that series is this focused on this. We'll also have one focused on SEBI's cybersecurity framework. It's called the SEBI CSCRF. I think that's coming up next week. But this is a generic um, within the financial system. This is kind of a generic attempt to cover three or four different organizations that uh, uh, that govern and regulate IT, the use of IT, and the protection of data, and the continuity of services within banking and financial sectors. Now, RBI, CERTIn, of course, is the computer emergency response team, and NPCI is the organization or the gateway that manages India's UPI. So, I know that some of you might be wondering what India is is. UPI stands for Unified Payments Interface, which just makes it instantaneous to transfer money from one person to another with no delay. All you need is their telephone number, and you can transfer money to them using this UPI interface. It's a fantastic digital platform in India, and it's really helped bring a large population of less privileged Indians into the formal financial world. So it's been a fantastic achievement over the last maybe decade, and it really caught on. I think during the pandemic when everybody was afraid to exchange um, currency notes and coins, that's when the use of digital currency and the use of the UPI, where people are still, for example, in India, the penetration of credit cards, for example, is very low. Unlike in some of you in your slightly more advanced Western countries, Western as compared to India, where credit card penetration is much higher than in India. In India, UPI really took because people like to spend the money that they have and not really borrow. Of course, that's also changing, right? So we'll quickly look at this now. The important thing here is, if you have been to my sessions, if you have been to my CISA review courses and the other courses that I conduct, you anybody here from there? Anybody here from one of those? Uh, any of my classes? Anybody here? No one. Oh, good. Okay, awesome. So I like to
Hi.
start all my classes by asking participants and students to make a note of two concepts, which is risk and business objectives. Everything is centered around risk, identifying risks. First, identifying the assets that you have. Assets not in terms of physical assets only, data is also a very important asset. A report that is generated from underlying data is also an asset. People are an asset, technology is an asset, your process is an asset, your facilities are an asset, your IT equipment, everything is they're all assets, right? Your information asset could be on a piece of paper, it need not be digital as well. So first, how to identify those, then to identify the risks that apply to them, and then understand the probability of that risk event happening. Right in the middle of the Sahara Desert, if you are building a data center and say you have to provide for rain or for floods, somebody might look at you and say this guy is a bit of a fool, right? Or in Siberia, you provide for high temperatures. So probability of a risk event happening also has to be taken into account to calculate its potential impact. And all our work as auditors, whichever organization we are looking at, is about risk, right? Even those amongst you who are financial auditors, you will always focus on, say, high value transactions or high risk customers or vendors or high risk transactions. We use these terms very casually in our daily life. All these three, four organizations which control financial institutions in India, and you can take your parallels into your countries. They all operate on the concept of risk and how to manage risk. That is all there is to it. Once you understand this basic concept, we can simply close today's session and we can all go home. Okay, now the scope of auditing IT of banks is to protect the financial infrastructure, which is of course critical to the citizens and of course to the country as well. Protect customer data and to ensure regulatory compliance. Now, this one line is actually repetitive. If you see that protection of financial infrastructure and customer data is part of regulatory compliance also, right? Regulatory compliance will include a fair number of other things. For example, fraud detection, for fraud prevention, business continuity, right? How to manage vendors, how to get software. Nowadays, of course, in the era of cloud, data sovereignty has become a very big issue. Where are you allowed to save your data? All financial companies in India, for example, are required to keep their data within the geography of India, right? So there's, but of course, what the intent of this when I wrote this down is to say that there could be other regulatory needs than this, right? This whole framework that these three, four organizations have set up are to address areas of governance. Now, what is governance? Governance is, I also we also go through this in my review course. When I do the CISA review course, for example, the governance is a part of a process of managing any organization which sets the framework on how the organization will work, right? So the governance are typically the senior leadership, the executive leadership, the board of directors, working with all business stakeholders, say senior leaders in all the departments, or to figure out what is the best way for the company to progress, right? And of course, remain viable, progress, profit, be compliant with the law. All those are business objectives, which is why I said risk and business objectives become critical. Business objective, it's also a valid business objective to be compliant with the law. Not being compliant with the law is not a valid business objective because your business could cease to exist, right? So governance is that part which sets the tone for how the rest of the organization will work. And the term management is used for those people who are executing or implementing the framework that the governance has set up. So there are two people in a way. There are two sets of people in any organization. One is the governance organization. One is the management organization. The governance management say the governance team says this is how you will work, and the management will say, okay, this is how we will implement whatever you have asked us for. So the governance framework will have policies. Of course, the law of the land is the overarching policy under which everything has to be made. An organization's policy cannot ignore regulations of the law. That always comes first. And then within that ambit of the law, you will have your own policy. You may adopt some industry best practices or industry standards. You may also adopt a standard framework, right? Like say ISO 27001 or CMMI or COBIT or any of the or ITIL or any of these frameworks for to to have. What do frameworks do? What do frameworks do? What do all these organizations do, like RBI or CERTIn or NPCI or SEBI, which I have not mentioned on this slide, but SEBI comes up. What do they do? They are giving us a standard against which we can test ourselves, right? So by ourselves mean if I am a bank, I am being given a standard against which I can test. If I am an auditor auditing a bank, that framework gives us a language to talk. Right now, if I were to decide to speak to you guys in, I don't know, Tamil, I don't know how many guys would understand here, right? Most of you won't. So the framework gives us a language or a protocol to speak to each other. That is, and it also gives the organization a framework of best practice. Okay. So these frameworks, they address areas like governance, cybersecurity, payment systems, and data privacy. Data privacy is going to get more and more and more important. Hopefully, we'll do a session on data privacy as well. There are just 3 or 4 concepts there. That's all. If you just focus on those 3 or 4 concepts, data privacy is an easy thing to do, to understand. Doing and implementing is a different challenge altogether, which also we'll try and cover. As an internal auditor, your focus should be to understand the scope of your audit, as it should be as an external auditor also. You should validate. You should have independence, right? irrespective of being internal or external, you should not be influenced by the auditee or the auditee or the team that you're auditing or the process you're auditing. You should maintain your independence, right? And your reporting, your auditing should be aligned to the organization's risk appetite. Every organization has a different risk appetite. That's why we have competition. If we did, if everybody had the same risk appetite or the ability to take risk, absorb risk, we would only have one company in every industry. Think about it, right? Because everybody feels that they can do better than the incumbent company or companies in that field. That's why we have so many. We had an Uber, then we had Lyft, or whichever way they came, right? Or in India, you have a Swiggy and a Zomato, or in whichever order they came. Similarly, so risk appetite is different. Therefore, as auditors, we have to keep not only the policies and the framework, but also the risk appetite of the organization that you're auditing in mind and audit accordingly. However, risk appetite does not override any regulations that apply. An organization doesn't say, and no organization can say that, oh, it's all right. The regulation needs me to have a disaster recovery setup, a hot site where every transaction is instantly copied, but I'll take the risk. No, you can't. Then you have an existential problem. You'll probably be shut down by the government. Your license may be revoked. You may be, given free accommodation at the nearest prison. There could be various penalties, right? Either as an external or an internal auditor, again, if you see what should you audit should be defined by the risk profile of everything that you're supposed to audit. You're supposed to audit, let's say, 10 things, out of which focus on the riskiest. Now, how do you know risk? You have to understand the business, of course. You can't go and audit a company whose business you don't have at least have a fair understanding of. Once you understand that, once you understand what are the assets that are covered in the area of your audit, you come to know that these are the potential risks. You see if they have identified those risks. If you see if as an auditor, if they have um, come to perform some kind of a business impact analysis to see if this risk event happens, what could be the potential impact on my business. Now, that could have a value to it. But say, okay, if this thing goes down for one day, our revenue losses $1 million, right? For example. Or you might say, listen, I can't really put a number to it, but it is critical, or it is of medium criticality, or it's highly critical, medium critical, low critical, or not at all, right? You can have those kind of qualitative measures also for risk assessment. So you always pick up the ones that have the maximum impact on the business. You focus on that. So that ensures that performing a risk assessment of the parts that you want to audit ensures that you minimize the risk that from audit that the audit may miss to cover something of material, something that is material, something that's important, right? So even in the audit, you must perform a risk assessment to see if the organization and the IT and the overall governance system of their organization's IT has performed a risk assessment. So if the risk assessment is kind of a iterative process that you have to perform a risk assessment to ensure that the organization has performed a risk assessment, right? Important things for you to documents to look at: organization chart. They help you understand the reporting structure, who works with who takes care of what parts of the business, and also importantly, it helps you understand the skills that will be required for those roles, because organization charts will also have some level of explaining of what position that is, not just the name. It will have some position, right? Chief revenue officer, right? Or things like that. So you get a feel for what kind of skills are required in that organization. Now tie that with your knowledge of what the organization does. Now you know that this organization needs these broad skills. Now if you were to break it down into a smaller unit of an IT organization, not just the whole organization. Once you see an IT organization can be organized in many ways. You need a lot of skills depending on how that IT infrastructure is. The IT organization or the people who work in IT may differ. Typically, you will have a head of IT. You will have someone who looks at applications, someone who looks at servers, someone who looks at networks, someone who looks at security, someone who looks at databases. These are the broad 4 or 5 categories that you will have in IT. And you might have a software development team, right? Those are the broad categories in IT that you'll have, right? Understand the policy stack. Policy stack is the regulation and a combination of whatever policies that the organization has adopted. You could also add industry standards that the two things industry standard they may apply, may be available for adoption by the company, and they may or they may not. If they have not, that gives you a clue that, listen, is there a case for me to recommend that this organization adopt this industry standard? It could be voluntary, right? Regulation, of course, you don't have a choice, but like for example in the credit card industry, PCI DSS, right? So there might be some parts of it which are not really implemented as well as you might want them to. You can that gives you an instant guidance on things that you can suggest in your report. Okay. Why do we need to audit banks IT? Because auditing, like audit of IT, like any other audit, the purpose of the audit is to provide comfort to stakeholders that the part that you are auditing, the department that you're auditing, the process that you're auditing, the technology that you're auditing is being run in accordance with regulations, policies, so that the objectives of the organizations are met while managing risks as per the risk appetite of the organization. Broadly, this is what we as auditors do. We are trying to give them reasonable comfort that yes, the operations are running as you want them to. Okay. So when it comes to effectiveness of IT assurance, the an IT assurance project, which is an audit engagement, is effective if it helps prevent mistakes, errors, or oversights. Right? This is what, if you ask me broadly, these two, three um, failures are what we are trying to minimize the chances of happening, or at least make that organization progress towards in a direction where they keep minimizing. So what we're looking for is progression over perfection. Perfection is difficult to achieve, so we want to achieve keep progressing year on year. Okay. Any kind of service disruptions or security breaches, data breaches, they erode customer trust. Therefore, auditing organizations like banks is a very critical function where the assurance function, that is the audit function, has to play a major role to ensure that as much as possible all the precautions are maintained, because it's very easy to lose trust. Once you lose trust, you can't really gain it back. It's very difficult to gain it back, right? Many companies have failed. They've gone out of business because they lost customer trust. But many companies have managed really serious breaches very well, right? And communication about breaches is also a very important part, right? Transparency, understanding to what extent you need to communicate what details to customers is also a very important part of managing disasters that we'll speak about separately when we look at disasters, right? We should, the things that we should do is what are the technologies in use and what is the justification for the technology. Why this is important is that there are a lot of IT leaders. I'm one of those. I mean, I've been an IT leader. I'm not one of those that I'm going to speak about, hopefully. They like to throw technology at everything, right? Technology is useful. It should be used, but it should be used appropriately, right? And it is our job as auditors to figure out if the due diligence was done before choosing the technology. Any investment should have some kind of verifiable ROI, right? There should be a business need for any project. Now, when I was IT head, CIO, CTO in different companies, I had a rule, right? So, for example, I'm just giving you. I'm not going to share my rules. In one organization, I had any project that cost more than say ₹1 million or required more than 6 or 8 weeks to implement was a project, right? That's how we classified the project. Once it's a project, then it had to go through a series of explanations. There had to be a presentation to me by the person in my team who wanted that project. There had to be a business need for it. I would insist on there being a business sponsor for it, which never came. Business would never sponsor, so we would take it on our head, which I realized over a period of time was the wrong thing to do. If the business did not sponsor, we should not have taken a lot of projects. And in hindsight, I realized that because I did them because I thought the organization needed them. A lot of projects failed, and that's true of many people, right? But IT people tend to throw technology. So our job as auditors is to see if they ask the right question, if there was a genuine business need for all implementation, software, hardware, any technology. Okay. Which we should also verify security, privacy, and operational controls and ensure that they are embedded into any systems that are designed. Now, when you buy systems, but by systems I mean software, hardware, typically software controls are already built in according to best practices. At least if you buy reputed software which is used in a few places, that software would probably be stable. It will have all the controls, not only application controls for data, but also technical controls in terms of data protection. So managing confidentiality, integrity, and availability of data is also a key feature of software when you buy or develop it. So those things are, there are better chance of them being taken care of. However, if you're building software for some whatever reason, if you decide to build software, if the customer, that is the auditing company or the bank or the other financial institution in this case, decides to build a software, why did they build the software? There are various reasons that companies will build software, because they may not get something that works exactly the way they want to. But is a software working the way exactly they want to a necessity? Or could they have done a better job of buying a standard software and adapting their processes for to meet those best practices, which we can hope to have, we can hope the company would have found in the ready-made software? These are the kind of questions we should ask. And then if you're developing the software, what kind of controls did you build as part of the design? Controls built as part of a design of a software will always be more robust and more effective. And effectiveness of a control is when a control meets its objectives. The objective of any control is to prevent or minimize the occurrence of a risk event, of an error, of a mistake, of some kind of a loss, of some kind of any event that stops that process from going ahead. So if you're building a software, if all controls required are built into the design, it becomes a more robust software. It minimizes the chances of these kind of events happening. Okay. With any project implemented, it's very important for us as auditors to check if a post implementation review is done. Now, a post-implementation review, again, my personal take on it, should be done at various stages, because most projects will not realize their return or promised return on investment for a certain period of time. Some may take 6 months, some may show results immediately. So whatever was the return on investment projected for that project slash investment, there should be a timeline. So we will save this much, or our revenue will increase by 20% over the next 3 years, for example, or we will save X number of hours every day. Now, X number of hours every day potentially is something you can meet much faster than 20% over 3 years, right? So a post implementation review, to my mind, may need to be done in phases to see if the promised ROIs were realized. And whatever the ROIs could be, simply improvements, or as I said, more productivity or more revenue, as the case may be. Okay. We should provide objective opinions on control design and operative effectiveness to boards. Right. Key evidence sources are business case documents, technology budgets, benefit realizations, risk and issue registers, disaster recovery drill records, and incident response documentation. If you see all of these evidences are what? Evidences, these evidences, if you see, are a record of a diligent IT department. If an IT department has these records properly maintained, which means they are on top of their operations. There's a lot of regulatory thing, out of respect for people who are not from India, and I believe there are a fair number of you. But quickly, I just written a summary on top. Indian banks operate under a complex regulatory framework with overlapping technology and security requirements. Auditors must map controls to specific regulatory clauses and verify compliance. One second, guys, somebody's been buzzing me madly. Who is it? One second. Sorry about that, guys. Hold on. So, but however, if you see all these are designed to ensure that the operations of banks or of financial institutions operate with a view to maintaining continuity of their services, having a high amount of uptime, protecting customer data, and providing proper uh, fraud detection and minimizing the chances of fraud and their customers losing their money and therefore their faith in the institution of banking. The sole focus of this is that to reduce the risk. If you were to, as auditors, if you focus on just risk and try and understand the process and see where are those risks, what is the probability of that risk, what is the impact of that risk, you are surely going to do a much better job than an auditor who is looking simply at a process and ticking off check boxes. Okay, software development, SDLC means software development life cycle, which it basically, while the word says development, a software development lifecycle also applies to software acquisition. So you should actually read SDLC as SALC/SDLC, software acquisition lifecycle or software development lifecycle. You either decide to buy, as I just mentioned, or develop software. You have to know what you want. So there is a requirement definition, right? You have to you always should go and see what is available in the market. For all you know, there might be something that fits your needs. That the chances are there is something that fits your needs. There is practically no industry today which is not served by some software to do something. Not possible, really, unless you are starting a completely new business. Uber may have had a challenge at one point in time that there was nothing available for their core business, so they had to develop it. So would have Netflix. But now you can go and launch an OTT platform in like 2 days. Very easy. You get white label things, go use a credit card, and you have your OTT platform ready. I would be surprised if you can also do something like Uber in a couple of days now. So the risks of software acquisition or software development are incorrect solution selection, cost and schedule overruns, and late security integration. We just spoke about security by design. This is a software development or acquisition is also a project which will, any project, if you were to look at it broadly, has to have three qualities at the end of it. It should meet the needs of the business as was envisaged when the project was initiated or approved or thought of or discussed. So there are a certain set of functionalities that the business expects from that project. The business also expects that that the project will deliver those functionalities within a certain period of time and within a certain cost. The combination of these three are mostly what businesses expect. That functionality could also be compliance with the law. So, for example, when GDPR went nuts, I think in 2018, all of us scrambled. In the company I worked in, we had an anonymous website, so nobody was even required to log in. So we weren't even storing anybody's email addresses, and only 2 or 3% of our traffic came from Europe. GDPR was primarily applicable to residents of Europe, and our 2 or 3% traffic was from Europe. So even then, we had to build in those manage cookies. We store your cookies. Do you accept cookies? Right? We find that on every website now. That is the result of GDPR. For those of you who are not aware of it, so that modification of a software to meet that GDPR regulation is also a functionality, right? That functionality should be delivered as per that regulation requires us to. It should be delivered in time. In time, we needed to meet the GDPR deadline, right? We couldn't go beyond it. So that time factor is also met in the case of regulation, and it has to be done at a reasonable cost, because when there are cost overruns, then the ROI just goes for a toss of any project. Okay. As an internal auditor, verify governance policies, review that there is an oversight committee, validate stage gate approvals at every stage. What are those approvals that are required? Monitor cost schedule, performance indicators, ensure there are post implementation reviews. As external auditors, sample full life cycle projects, assess control effectiveness. What is control effectiveness? Every control has an objective. Every control is supposed to reduce the risk of some error happening, right? If the control meets its objectives, right, and does not allow or reasonably protects you from that event from happening, the control is effective. That is what it means. It's a very simple concept. Validate early security privacy. Critical evidence here is a governance policy, steering committee minutes. If there are steering committees, what are the requirements? Typically in software, you will have a business requirement document. We would have heard the term BRD. Architectural design records, comprehensive test evidence testing is extremely critical. Whether you are acquiring a software, that is buying a ready-made software, or building it, testing is important. And formal approvals and post-implementation reports. All right.
Sorry, can I quickly ask you a question?
Yes, please.
The effectiveness of controls, how is that judged? Is that quantitative or qualitative?
I'm glad you asked the question. So I will, with your permission, use a very simple example. May I?
Thank you.
No problem. Sorry, who was? May I know your name, sir?
Nadeem.
Nadeem, hi. So yeah, okay. So let's look at it like this. Let's say you are buying or developing an HRMS software, a human resource management software. Yeah.
Yes.
You have a new employee record screen. One of the fields in the new employee record screen is date of birth.
Okay.
All right. Now the operator enters 32/12/2025. What should that software do?
You should flag it, really.
As what?
If it's incorrect, it shouldn't accept
Why?
the input. If the date of birth is incorrect.
Yeah, sure. Incorrect. What do you define incorrect, sir? 32 is an invalid value for the day field. Yes?
Yes.
Okay, that's one. So today
input validation. There should be some input validation to that.
I agree. Now, if your requirement is that 32 cannot be entered along with 12, because you only have 31 days in December, and the software doesn't let you enter anything more than 12 or less than 1, that control is effective. Yes?
Yes. No, the decision, is that the auditor's decision that it's effective, or is that the client's decision, or is that mutual?
Oh, it's the auditor is testing whatever controls are required at every point. Auditor should test. So okay, that's one kind of a test, which is for a valid date. But is this date correct? It's not, because a date of birth of an employee can't be in the future. Okay, this is another control. Correct? And I'm guessing in most countries you can't employ anyone who's less than 18 years of age. They should also be part of that check. So one date of birth field will have a check for a valid date, right? The date should not be in the future, and today minus date should at least be 18 years. Now, if the date field in your new employee screen of your HRMS meets all these control objectives, one objective is to have a valid date. The other objective is to be compliant with the law. If your date field controls meet both these objectives, it's an effective control.
Okay.
Does that make sense?
Yes, that's a very simple example. How would it apply to more technical controls?
You can ask me a question, I can try and answer it. I'm hoping that a simple example will help you extrapolate the same to...
Yeah, no, I appreciate that. Thank you very much. That's very clear. You made it very clear in that example. What about incident response systems?
Yeah, sure. Now, incident response is a little more difficult to classify because different organizations, there is no standard for it.
Okay.
Every organization will have a certain response that they require to incidents. Now, who defines that? That is defined by your risk assessment.
Thank you.
Right? Now, you take the risk assessment, you say what the business expects. Now, let us take the incidents of I have a database server, the database server crashes. That's an incident? Yes?
Yes.
Now, what does the business expect in terms of recovery?
Okay, so it's based on the risk appetite, basically, and it's set by management.
Yes.
That's the baseline. Are you talking about?
Yes, of course. I'm saying again, remember, if there is a regulation that governs even that database crash, then that has to be met.
Thank you.
Now I'm going to just take half a minute more because this is important. This covers on everything, right? So, in one of the organizations that I joined, we had a database server which managed where the application which managed the large chunk of our revenues, all that data was sitting in the database, in an Oracle database. So when I joined, I spent the first 6 or 8 weeks odd doing a risk assessment. As part of that, I came to that, I figured out the backup they were doing diligently taking a backup every night, and the backup they were keeping in the same server. Okay? Yeah. There was certain sense of protection. If something happened to the database, they could recover the data from the server. But if something happened to the server, everything was lost. Right? So it took me a month. I bought another server, a physical server. I bought a database license. And then I said, okay, every night you copy, make a backup and restore it on the other server. One backup every night. So what did that give me? Worst case, 24 hours recovery. Worst case. So I was backing, my backup would start around 11 p.m., 11 in the night. So let's say if the next night, 10 p.m., my database crashes, I would have lost 24 hours of work. The business would have to recreate 24 hours of work. To recreate 24 hours of work, it would take them at least 12 to 14 hours, right? And then they would have to catch up with the next day's work. So it would take them between 36 and 48 hours to come to normal from the time of recovery. Okay. So then when the business grew, I said, listen, this won't do 24 hours. My business at 24 hours, we can't catch up. There is no way in hell we can catch up. Then what did we do? Then we went to Oracle Cloud. We put up an instance there. We set up replication of Oracle database from our premises to Oracle Cloud. Right? So we also took out the risk of something happening to our building, happening to our server, happening to our network. Everything we took off, and then every transaction was getting replicated. So the maximum loss was 10 transactions, and the business said yes. Now, when we were testing it, we would do a test every week. Every week, Saturday morning, we would test if that backup system was usable. Right? So we would bring down our main system. We would connect our software to the backup system on the cloud. We would test it. I would be sent a mail with screenshots. Yes, this worked, this worked, this worked. Every Saturday morning, I would get that. Now, we reduced our response or our recovery from that from any disaster to about 10 transactions from 48 hours. Right?
Were you the auditor?
No, I was the IT head. I was the CTO.
So you basically carried out recovery time objective for the organization.
That's correct. That's
how
correct.
much data they can afford to lose. So
That's recovery point objective. Yes, that is recovery
Thank
point objective, Nadeem.
Yes.
How much data can they afford to lose is recovery point.
Yes.
In how much time
Thank
should
you.
they restore operations is recovery time.
Thank you, sir. You made it very clear. Thank you.
Awesome. All right. Now, outsourcing and cloud, I briefly mentioned it in the beginning. Residency, that is data sovereignty. It's called either residency, that where does the data reside, are very important aspects to consider when you're looking at, and most of these are governed by law. Even before there was a specific regulation or restriction on, say, I'm talking of India. I don't know how it is in other countries. You may want to find out how it is managed in your countries. Many companies have data sovereignty and residency laws, so you must understand them. Okay. Issue with cloud is lock-in. So one of the most important things I look at when anybody signs up for to host their applications data on the cloud is, what will you do if you want to get out of that cloud service provider? What are the steps that you will need to take? Will you be able to use the data? This is especially important with SaaS platforms. Let's say I'm using Salesforce. Salesforce gives you a complete software dump. You want to exit? Yeah, sure. Take a here. Here's a full software dump. What will you do with that dump? Most people can't do anything with the dump. Now, there are certain other options. For example, there are Salesforce competitors who will happily import all the data, most of it, but nobody will be able to import 100%. So are you aware of that? Or are you tying yourself into that vendor? Another good example is when you are using, say, certain key services of cloud service providers, like key management services, right? I host applications, I develop applications, I host them. I'm developing a couple of SaaS products. So when I wanted certain services, I decided that I did not want to use those services of the cloud service provider because I was going to get tied in. For example, I wanted something that would trigger every time an event happened, right? So I could have used AWS Lambda. I realized that if I use AWS Lambda, I wouldn't be able to take that code out and run it on Azure Functions, for example, right? So what I did in this software, I just changed the way I wrote the software that I wouldn't need serverless computing. And I decided that if I ever needed serverless computing, I know there are very, very good, reliable, open source serverless computing platforms that I would implement if I needed them at scale, right? So these kind of decisions are important to look at when you're auditing cloud implementations, for not only for banks, but we are talking of banks, so we'll talk of that. Okay. Now, there is another thing we always insist with any third party. Now, this slide is for outsourcing and cloud. With cloud, it can't really happen because, for example, take a most banks would be, say, I would guess most banks would be smaller than AWS, right? And also, AWS is so tight about allowing people access into their infrastructure that they will not allow right to audit. So what do? They tell you that, listen, we have all these certifications, SOT2 and ISO 27001, whatever, all we comply with all these standards to ensure that your data is safe from prying eyes. Now, with the cloud, that is one statement to make, that we have all these certifications. However, as auditors, we must understand, in the cloud, we must understand the shared responsibility model. Depending on what service you take from the cloud, the client has certain responsibilities. The cloud provider has certain responsibilities. For example, if it is Salesforce, you don't do anything. You just go pay your credit card, thing, go buy, and you start using it, for example. But putting in the right data, ensuring that the right people have access, which means the roles that you define are correctly defined. You can't blame Salesforce tomorrow that, oh, some unauthorized person saw my data. If you have given somebody rights, they'll be able to see the data. So that is your responsibility. So similarly, with all other kinds of cloud systems you buy, the client has certain responsibilities, the cloud service provider has certain responsibilities. You must understand what kind of a cloud service that the bank is using. That will tell you where does the bank's responsibility end and where does the vendor's responsibility start. Okay, is the vendor responsible only for the underlying hardware? Is the vendor responsible for the operating system also? Is the vendor responsible for the database, maintaining the database also? Where is it? Or is the vendor responsible for the application, or are you responsible for the customer responsible for the application? Now, that is with the cloud. That is one type of outsourcing. Other type of outsourcing that banks will do is, I'm outsourced my IT. I've outsourced some processing of some of my transactions to an outside party. The most important concept for us as auditors to remember is, irrespective of what outsourcing you do, the accountability for that process remains with the company, with the client, or with the bank, or with the company that's outsourcing. You could have contracts, you could have non-disclosure agreements, you could have penalty clauses, you could have SLAs, you might be monitoring those SLAs, you might be penalizing the vendor. All that is good, but who will suffer the reputation loss? You might have financial protection, but who will suffer the reputation loss? The bank will, or your auditing company will. When you buy a car from Toyota, most of us probably know Toyota doesn't make the tires. Most of us probably know that Toyota doesn't make the wiring harnesses, right? Almost all wiring, a large chunk of wiring harnesses are made by a company in Noida, India, Motherson Sumi Systems, for almost all car vehicle manufacturers in the world. You might know that Toyota doesn't manufacture the steering, but when something goes wrong, who do you blame? Do you blame the wiring harness manufacturer, or do you blame Toyota? You blame Toyota. Toyota does recalls. It may be a part that they haven't manufactured. Who is suffering the reputation loss? Toyota is. Toyota might have back-to-back agreements with the component manufacturers that if someone goes wrong, you have to give me a free replacement within the next period of time. That's only financial protection. Toyota is still accountable for everything that they outsource, right? So having a right to audit clause with your outsourced partners is extremely critical. I audited the outsourced vendor of a national medical or health insurance company. What this company would do is they had outsourced fraud investigation. So the insurance company would flag potential fraudulent claims, and they would give all the details to the third party vendor to actually do the legwork to go and find if these claims were actually fraudulent or not. And you won't believe it, they showed me some cases where there was an actual hospitalization surgery claim, and the only thing that existed there in the name of a hospital was one dirty board, nothing else. There was no building, there was nothing. There's not even a single person with a single table. There's only board which says XXX hospital. It's that great. Okay, that's really ridiculous. But anyway, but with this, there were I could go and audit that third party vendors operations, IT operations, because this national insurer had a right to audit clause. And when I went there, I saw that there was absolutely practically next to zero data protection internally within the third party vendor. Anybody and everybody could access the Google Drive, where every insurance claim document that was marked as fraudulent, including all health reports, all tests, discharge summaries, copies of their scans, their X-rays, everything was there, and everybody could access it. There was no privacy of data at all. And I flagged it, and I believe the insurance company really liked it, right? So what we as auditors have to see is there a vendor risk rating that is performed, right? And are there SLAs instituted, monitored, and enforced? Whatever controls are required had that process been in-house should also be present with outsourced vendors, if not more. Okay. Due diligence before onboarding vendors, cloud security posture assessments. Now here again, cloud security posture assessments will also depend on what kind of service you're taking from the cloud service provider, and you and the bank and the auditor should both understand the shared responsibility model. Only then you'll be able to perform this security posture assessment correctly. Exit strategies, okay. Through periodic drills, I just explained that. I took the example of, say, Salesforce. Perform annual vendor reviews and certifications. Monitor for shadow IT through network analysis. Shadow IT is where employees find ways of doing their work or malicious activity using platform software services that IT does not approve of. That is basically shadow IT. Now, key evidence for these are vendor contracts with audit clauses, data protection impact assessments, security operations center, and security incident and event management software, coverage of vendor connections, cloud service provider configuration, exit drills, and shadow IT detection reports. Okay. Cybersecurity operations and incident reporting, right? Many of these organizations are required by law to implement a security operations center, where you should have the ability to detect, analyze, notify, contain, and recover from security incidents. And CERT-In, which is the Computer Emergency Response Team of India, has very clear directions that all security incidents should be declared within 6 hours of the company coming to know of these things. So guys, quickly, we're going to move here. Our next CISA training batch starts on the 11th of January. Everybody have a good Christmas and great year, and hopefully I'll see some of you in our next CISA batch. We've had great results in our CISA batches. I think we had a really high percentage of people who are passing. You'll get a CP as I think it was Raghav who announced this. Raghav from GISA Council. You'll get a CP certificate for the hour that you have spent with us. And in the CISA course, we spent about 40 hours together. I have built a small website for people who come to these, who attend these review courses, where there are close to, I think, 700 questions that you can attempt in an MCQ format. I give access to anybody who comes to these, participates in these courses. So that's mostly free for everyone. And I'm also uploading questions regularly. I'm going to upload 1,000 more questions for CISA itself. I'll also be uploading questions for other certifications. You're welcome to come and try it out. And you also get a discounted examination voucher. You can ask GISA Council for details on the discounted examination voucher. You get a really detailed presentations for all chapters of CISA, right? And we have weekend classes. They are India time 6 p.m. to 10 p.m. on Saturdays and Sundays for 10 days, total of 40 hours, right? Data privacy, 2-3 concepts, right? A person owns data. I own my data, my name, my date of birth, my blood group, my mother's name, my father's name, my address, my phone number, my social security number, my Aadhaar, my PAN are data that belong to me. I'll give you just these 2 or 3 things. I am the data principal. I own the data. A company that's collecting data from me is a controller, is the controller of data. He's controlling my data. They should take my consent. They cannot collect my data without my consent. When they are collecting my data, they should specify the purpose for which they are collecting the data. They should use the data only for the purpose that they have said, they have told me they are collecting the data for. Depending on regulations, they should delete the data upon that purpose for which the declared purpose for which the data is collected with my consent. The data should be deleted as long as the regulation doesn't require them to keep it. The regulation always overrides everything. And if such a regulation applies in the data they are collecting, they should make it clear to me that due to this regulation, they will not be deleting my data. And I should have the right to ask the data controller what data they have on me, and I should have the right to ask for that data to be deleted. Right. So the GDPR, I think if I may be wrong about this, so please check. I think GDPR calls this to be right to be forgotten. Right. So I should be able to ask the data controller to delete my data. These are the basic principles. Consent.
You are absolutely right about this.
Sorry.
That's the right of.
That's the right
This
term,
is
right?
Yes. It's called right to forget.
Right to be forgotten, right, Syed? Yeah, thank you. Yeah. So these are the basic concepts. Whoever owns the data, they have full rights on their data. Now, the only people who are allowed to do anything with your data without your consent is the government. But we will not go and make political statements today. Yeah. Okay. Typically, in the Indian bank system, the regulations require that maximum recovery time objective for critical payment is about 4 hours. You can't have anything down for more than 4 hours. And the recovery point objective, one of you earlier asked me, recovery point objective is how old the data can, now how much data can you lose? Is about 15 minutes. Availability target, according to me, is very low. 99.9 is too low. It should be a minimum of 99.99. Okay. Now, again, important things to look for are DR drills, right, or business continuity drills. What we recommend when I teach the CISA course, what I recommend is that as auditors, we should promote documentation of all drills being done. An observer should be present to document DR and BCP drills, who documents what was done, who was supposed to do what in reaction to that disaster event being simulated, and what was their actual response and what can be improved. Right? This is the purpose of doing a DR drill. When you do a drill, you must do a post-drill review so that you can improve and you can learn from it. Okay, this we have quickly spoken about. I will go. RBI requires banks, that is the Reserve Bank of India, which is the central controller, and that will probably be true of all central banks anywhere in the world, require robust internal audit functions with qualified technology auditors independent from IT management. Independent from IT management is the most critical part here. External auditors supplement but don't replace internal audits. Continuous assurance. Okay, quickly, I think we are at the end of our day. As usual, I take more time than I am given. Any quick questions, anyone?
My name is Sayed Hassan. I am logging from London, UK. I've got one quick question about the risk appetite. I mean, how, in a very simple term, how would you describe risk appetite?
You really want a simple example, sir?
Yes, example or just a simple, very high
I'll
level.
I'll give you a really simple example. Okay.
Yes, please. Thank you.
You have a clear objective that you want to reach your place of work in the morning. Almost all of us have that. Yes. I want to reach my place of work.
Correct.
Yes. Well, let us assume to reach your place of work, you have to cross a busy intersection. You have to cross on foot.
Yeah.
Now, what is the risk there?
Well, risk to be hit by a car or.
Very good. So you have an asset. You have the asset which is your life.
Yeah.
You have identified a potential risk, which is you might get hit by a car.
Yeah.
All right. Now,
Correct, yeah.
you say, okay, what are the measures I can take to minimize the chances of that risk event happening? You say the probability of this risk event happening is decently high. So what will I do? I come to that road. I have to walk 200 meters to the right hand side. I have to go on the right. I'm using right specifically. I'll come to it by. And then there is a traffic signal. There is a zebra crossing. I'll wait for the traffic signal to become red. I will wait for the pedestrian crossing to become green, and then I will walk on the zebra crossing.
Yeah.
You have done everything you can do, correct?
Yes.
These are risk mitigation measures. Now, is your risk of getting run over zero?
No.
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 There is always a madman like Iyer
Yeah.
who will not give a damn about your red signal, about your green signal, about your zebra crossing. But you say,
About
listen,
the correct. Yeah.
chances of that happening are so low that I can take that. That is a residual risk. I will take it. I accept that risk. That is your risk appetite, Syed. But there is
So,
Mr. Sorry?
so in the context of, let's say, I mean, obviously you are covering the banking domain today. So in the context of banking domain, I mean, are you, I'm sure you must have had like thousands of examples, but can you give me one example pertaining to the banking domain, or any process, one process of banking? Let's say, uh, let's say they're holding the personal data. So how the risk appetite will come into that sort of scenario?
No, I'm just trying to see if there is something here that I can help you with offhand. Data privacy. See what we can look here. I can't think of any specific immediately. I'm trying to rack my brains to see when I've audited banks, what have I seen? I've audited some. I've audited there are a couple of types of banks in India. For example, you have your cooperative banks, scheduled banks, and you have the other standard banks. There are different rules that apply to cooperative banks. They are less stringent. So there the the need for the regulatory need for uptimes are slightly more relaxed than this. I'm trying to see what were the things we found there. Syed, I'm sorry, I can't think of any banking specific example offhand.
That's fine. That's fine. I will research, but obviously you have clarified the, there a bit of ambiguity in my brain, so you have clarified very
So
beautifully.
what I leave you
Yeah.
with this thought, Syed. So that is your risk
Great.
appetite. Okay.
Yeah. Yeah.
Or
Yes. Yes.
let's say there is Vijay. Vijay, I'm sorry, I'm with your permission, I'll take your name. Vijay says, I am not willing to take even that risk that I'm
Mm,
crossing it on the red light
mm,
when the pedestrian signal is green and I'm on the zebra. That little
mm.
bit of residual risk I'm not willing to take. If I
Yeah.
go
Yeah.
left, I can walk 1 kilometer. There is
Yeah.
an overbridge. I will take the overbridge and I'll walk back.
Yeah.
Right?
Mm,
So
mm.
his risk appetite is lesser than you. Now,
Lesser than, yeah.
banks work in such a strongly regulated
Yeah.
environment, right?
Correct.
That they
Yeah.
have very little leeway for individual risk appetites,
Right.
right? They have very strict, internal audit regulations. They have very strict segregation of duty requirements. They have very
Mm.
strict disaster recovery requirements. You've seen that, 4 hours that payment system can go down only for 4 hours. Now, some banks may say, listen, I have the leeway of 4 hours,
Mm.
right? My systems aren't used so much. So I will use the leeway and I'll have a cold standby. Some banks will say, listen, I can't even take that risk, right? I have to have my payments, if anything happens, restored in 2-3 minutes,
Mm.
right? There you have the leeway. There your risk appetite and can decide the kind of backup systems you want to implement. For example, right? Now, some banks require a physical signature on documents for approvals of certain amounts or higher. They may not be required by regulation. The regulations may not define the levels of approval. That may be left to individual banks to decide. Some banks may say, listen, why do we need paper? We can all have it on a digital platform, and we can have login based approvals, right? The chances of somebody sharing their accounts with someone are very little. So we can go ahead and have digital approvals on screen. These are some examples that I can, as I'm talking to you, I'm just coming up with some examples.
Nice.
Hello, sir.
Yes, hi.
All right. Thank you, sir. There is a question I want to ask based on CESA. Can you hear me, sir?
Yes, please.
All right. Previously, when I wanted to collect this collect the certification of this, is I make an inquiry about it. So part of what they told me is that I have to have an experience in that field before I can be certified as a CISA, as an system auditor, system information auditor. So, but now you getting us through the requirements. I want to know the requirements that because I'm an IT person and a system administrator as well, but I'm considering of acquiring the certificate, which is CISA certificate for years now. So but I want to know the necessary thing that I need to put in place.
Okay,
So
I got a question, sir. My answer is this.
Okay.
ISACA calls CISA a job practice examination. The CISA test is called a job practice test, which means the CISA review manual, if you were to buy and you see it, the CISA review manual says that the review manual by itself is not enough study material for acing the CISA exam. You are expected to bring in your own practical knowledge to the CISA exam. That is the only reason they expect that you would have spent some time working in the IT audit field before you get to your CISA exam. However, that's a recommendation. I don't remember. I would invite you to go into isaka.org and read. I'm not sure if there have any changes. I think it's only recommended. I don't think it's mandated, but I would request you to please go into isaka.org and look at the requirements for the CISA exam. I think they're recommended, not mandated.
Yeah.
Yes, Ravi?
Yeah, sorry. I just wanted to respond to that question, that risk appetite, right? Real-time example, which you wanted to give a classic example. I just recollected one example, probably we can detail discussion. So probably one outage lasted 2 hours due to a delayed failover. So probably that could be a classic example for this risk appetite. Like for example, a threshold could be a 30 minutes of time, but it lasted 2 hours delay.
Correct. Like I gave the same example, right? The regulation requires that payment services should not go down for more than 4 hours. Some banks may say, listen, I have 4 hours. I will restore it in 3 hours and 55 minutes. Some banks will say, listen, I can't take the risk of 3 hours. I have to have it back in 15 minutes. It's possible.
Yeah.
Yes.
True.
Thank you for that, Ravi. Thank you for anybody else?
Yes, thank you very much, Ravi, and thank you. Yeah, lovely. That makes sense.
Welcome.
Thank you, Ravi. Thank you, Syed, and everybody else. Anything else? So again, reminder, guys.
Hello.
Next CISA batch starts on.
Hello, I have a question, please.
Hi.
Hi.
Yes, I will be enrolling definitely, and
Yeah.
I'm leaving to take a leave to log off now. To do
Thank you.
something
You have a good evening, and hopefully see
Yeah,
you.
I have a question before you go.
I'll
Sir,
speak to Hiral, finalize my enrollment. I will speak to Hiral about it.
Awesome. I hope you guys found some value in today's session.
Yes, sir. Yes,
Very,
I
sir.
have
very,
a
very
question.
good.
I have a
Sir,
question, just very brief.
there is
Just
one
very
question.
brief question.
Yes, please.
Sir,
Yeah,
what is
I
the
want to
difference?
ask.
What is the difference between information technology audit and cybersecurity audit? Is it the same or is it different?
So cybersecurity is a part of information technology.
Okay.
So,
right?
okay.
Cybersecurity audit typically will look at one part of IT,
Mhm.
right? IT may include a cybersecurity. IT audit may include cybersecurity also. Cybersecurity typically will only look at security aspects of IT and not other aspects of IT infrastructure, software, vendors, outsourcing, all that shit. It won't look at. Thank you, Sandeep. Thank you, guys.
Okay. Great, sir. Thank you. Got the point. Thank you.
Thank you. Thank you.
Thank you, sir. Have a nice evening, sir. Thank you.
You too. Thank you, guys.
Thank you. Good night.
Anyone else? Any other questions? Otherwise, we will see you soon.
Okay.
Thank you,
Hello.
sir. Thank you.
Hello.
Thank you, guys. Bye bye.
Thank you, sir. Bye, sir.
Everybody can tap out, guys. Morning.
Hi, sir.
Hi.
Hi, sir. Actually, I work in the banking domain. So, whether you teach CDPSC?
Hello, sir.
Sorry.
Yes, sir.
CDPSC.
Yeah. What about
Based on
CDPSC?
okay, see.
Mr. Idavu, give me a minute. Let me answer Mr. Ilango's question, please.
Yes, I work in the banking domain where I'm into business part. Okay, so I take a decision on the business on the digital platform. Okay, so I plan to do my certification in CDPSC on data protection. Data protection.
Yeah.
Okay,
Okay.
because I'm doing many times
Not
we
bad.
are doing a many bigger job role in our integration part with the fintechs.
Okay.
So it is very good to go on with the CISA or with CDPSC, sir.
So
I need your
CISA is good
suggestion on
for CISA is good for not only for you if you want to become an IT auditor. I was an IT head. I was a chief information officer. CISA changed the way I looked at IT also. So
Okay.
CISA is great even for a general IT practitioner, not just if you want to become an auditor.
Okay.
All right. So yes, but
Okay.
CDPSC from a privacy perspective is a great certification to have.
Okay.
Or if you are willing to wait for, I don't know, 3, maybe 4 months, my book on CDPSC will be out.
Sure, sir. Sure, sir. So
You can buy the book.
Sure, of
Shameless
course.
plug of my book.
Sure, sir. So are you available in English, sir?
Yes, it will be available in English.
Okay. So நீங்க தமிழ்ல சொன்னீங்க?
Ama, yes.
Yes.
Yes,
I'm
Mr.
from Chennai, sir.
Yes, Mr.
Thank you, sir.
Idavu, how can I help you, sir?
All right, sir. It's still based on the question I asked earlier. Being a system auditor, a system information auditor, I still don't understand because presently now, I'm considering of getting a CCNA as a networking person.
Yeah.
So after upgrading from CCNA, the CCNP, then under that there's still under that we still have another professional course career for that until we get to that CISA. So it is that CISA I'm still wants to out there how it is because you mean if I don't have the experience, won't I be certified for the career?
I am afraid don't think I'll be able to help you with an answer to that. I don't think I'm a very good career coach that way.
I'm a system administrator person.
Yeah, I don't think I can give you a reasonably good answer, sir. I'm sorry.
Okay. Yeah, I'll make research on it then if your email is the one they drop on the chat group, right?
You can contact me through GISA Council. You can do that. So
All right, no problem then.
all right then. Thank you then. Bye bye everyone.
Hey, so
Thank you, sir. Thank you, sir.
Thank you.
Hi, sir.
Yeah, hi.
So, what kind of roles can we expect with this certifications?
With CISA, IT audits are going to be in more and more demand as if you are in India. CERTIn has recently come out with a guideline that all our organizations have to get their IT audited, and we have very few IT auditors.
Okay, sir. So, I have an experience in e-commerce company in backend operations. So,
Very nice.
with this certification, can I get into job? Like only with this certification, can I get
Yes,
into a role?
yes,
Or
as IT auditors, yes.
only this certification helps?
Yes, only CISA is good enough to become an IT auditor. It's the world's leading certification. I think the only certification for IT auditors.
Okay, sir. Thank you so much.
No problem. All right then. Bye bye then.